And we brought you those breaking headlines earlier about Europe's efforts to widen its rescue fund falling short of what was needed. Well, let's get some details on what that means and what the implications could be for the Eurozone. Bloomberg's Jim Hertling is in Paris and joins us now. Jim, what's the bottom line from today's report?
Hi, Margaret. The bottom line is that Europe looks like it's going to have to go back to the drawing board a little bit. They thought they had the final plan to solve their debt crisis last month. And right now, as they're dotting the I's and crossing the T's, they've come to the realization that it's probably not going to work as expected. They're not going to get as much bang for the buck out of their main rescue fund. And now finance ministers are telling us that they're looking to turn to the IMF, and they're hopeful that that might bring the central bank into the picture as well with their deep pockets.
Right. Well, one of the issues with the IMF already was that they would need more funds in order to serve as a bailout mechanism. So where's the money going to come from?
Well, that's right. What our sources told us today is that what they're talking about is that the central bank, the European Central Bank, would lend money to the IMF with the understanding that it would be loaned back to Europe to help countries such as Italy, such as Spain. The problem for the central bank, and the problem that the Eurozone has had, is that the central bank feels constrained, feels prohibited in their treaties from lending directly to the governments. And that the economists we speak to, the investors we speak to, say ultimately it's going to have to come down to the central bank essentially printing money to help Europe out of the debt hole that it's in.
So what you're describing is that the ECB is the only one that has the money, but they don't have the mandate to do what is needed. So that's why the IMF would have to get involved?
That's exactly right. That's exactly right. And there's another piece of it, too. If Europe kicks in more money through the IMF, and we're talking about tens, if not hundreds of billions of dollars, then another vehicle that they have promised in their bailout plan that they did last month was to raise money in a special purpose vehicle from cash-rich countries such as China, such as Brazil, such as Russia. And so far, those countries have been reluctant to step up. But once Europe puts more money into its bailout effort through the ECB, then the thinking might be that that would encourage other countries to kick in more cash.
Jim, thank you very much for explaining that.